Nationwide foreclosures are continuing to rise month over month, with February seeing an 11% increase from January of this year. As mortgage rates rise and foreclosures also increase, could this be the sign of a market correction that everyone has been talking about in the real estate market? Hello everyone, Marcia Melendez bringing you more valuable information about real estate, business, and of course, everything in Brooklyn. Please take a moment to smash the like button and also subscribe if you haven't done so. This way I can continue to bring you more interesting and valuable videos such as this one. Homeowners right now are being faced with a double whammy: rising interest rates and the end of foreclosure protections that were put in place during the height of the COVID-19 pandemic. All over the country, foreclosure risings are continuing to increase each month, with February of this year seeing 25,833 new foreclosures, which was an 11% increase from January. Let's look at the data for New York City and Brooklyn. As you can see from the following chart, an end of the foreclosure moratorium has resulted in the first quarter of this year seeing the highest number of any foreclosure filings since the first quarter of 2020, when there were only 124. Even back then, this was an artificially false number because the COVID-19 pandemic had just started. So of course, there were less foreclosure filings then. But look at what we see now. Brooklyn right now has had the highest number with a total of 28 thus far. But just looking at the total number of foreclosures does not give you the total picture. To get the full foreclosure picture, we have to look at the number of list pendings which were filed, because unfortunately many of these will actually convert to actual foreclosures in the future. The term list pendens is Latin for a suit pending and literally means a lawsuit is pending. It is often abbreviated as list pend. If you see this term connected with a piece of property, whether yours or one you are taking a look at, it means legal action has been filed in regards to that property. So buyer beware. As mentioned above, in the first quarter of this year, only 87 first-time foreclosures were registered in the whole of New York City's 5 boroughs, a historically low figure outside of the pandemic. However, the number of list pendants have taken off like a rocket, and 1,023 were filed in the first quarter of this year alone, suggesting that the number of foreclosures will also be rising in the months ahead. We also need to remember that today's foreclosure statistics, while much higher than the recent past, still are well below the pre-pandemic level by a lot. AT&T OM, which is a leading provider of nationwide property data, reported that in 2021, there was a total of 151,153 foreclosure filings for the entire year, which was 69% less than the pre-pandemic levels in 2019. I think a lot of homeowners, and I know that was true for a lot of Brooklyn homeowners, took advantage of the equity in their homes and decided to sell before they got in trouble with their mortgages and had to go through a foreclosure. That was a very smart move on their part. Mortgage moratoriums prohibited new foreclosures from starting for nearly 2 years, creating artificially low foreclosure rates. But now that these protections have expired, and with the increasing interest rates that we're seeing, the foreclosure numbers are seeing double-digit growth. Nevertheless, the real estate market is still seeing fierce competition and high demand due to the overall low inventory for sale of homes nationwide. The Federal Reserve has stated that it will continue to raise rates, and we can see that is exactly what they have been doing over the past few weeks, all in an effort to combat this crazy inflation. This could curtail the rapid growth that the housing market has been seeing. But for now, all signs point to the Brooklyn housing market and others staying extremely busy. Employment numbers remain strong, and we are still in a seller's market with home equity levels at all-time highs. But this doesn't help the families that are having financial challenges right now. If you are one of the homeowners having problems paying your mortgage and who may be thinking of filing bankruptcy or foreclosing on your home as the only solution, you need to do your due diligence and first review all of your options, given the still red hot market that we are in. If you are having problems with your mortgages, payments, there are solid alternatives to avoid foreclosure. Falling behind on your mortgage is stressful, but it's never hopeless. Believe me, we have been there. We have been foreclosed on before on more than one piece of property. And I'm here to tell you that yes, you will survive it. Stop beating yourself up and see what your options are. Here are a few that could help. First thing I would think about is trying to refinance. Yes, one way to attack this problem is by seeing if you could get a lower rate and reduce your monthly payments by refinancing your current mortgage loan. In order to do this, you will need to be current on your mortgage for a minimum of 6 months, usually with no more than one late payment in the last 12 months. But different banks have different criteria. So you need to check with your mortgage servicer to see if you're behind on your mortgage, but still making payments is getting harder. This is really a strong option. Unfortunately, for a lot of us, me included, this was not an option when we were facing foreclosure because yes, we had missed late payments. So the banks denied our request, even though we did have more than enough equity in the property. With a repayment option, customers who have been impacted by COVID-19 fallout and need assistance in making their mortgage payments can still review certain options that they have with their banks. Even though the official modification and forbearance plan is over, most banks are still working with individual customers to help them if they're facing problems paying for their loans. While refinance means replacing your existing loan with a new loan, modification keeps your existing loan and just changes its terms. Under this option, you reach an agreement between you and your mortgage company to change the original terms of your mortgage, such as the monthly payment amount, they could lessen it, or the length of the loan, they could increase it, or the interest rate. But right now, I don't think they're going to be reducing any interest rates, so we could forget about that option. But they definitely could reduce your monthly payments and stretch the mortgage out over a longer period, which will give you a more affordable way to make those payments every month. We know mortgage forbearance provided a lifeline for millions of homeowners during the pandemic. We now have to decide, if you're having problems with your mortgage, how to move forward. Remember, forbearance was not loan forgiveness. You still have to pay back that money that the bank modified during COVID. The good news here is that banks are offering several different options for homeowners to repay once their term expires, as we discussed before. So reach out to yours and see what your options are. I know it can be scary and overwhelming to think about, but believe me, you will come out of this and learn some valuable lessons in the process. We have been there, so I know what you're going through, but trust me, just take baby steps once at a time. You will get through it. Do as much research as you can for yourself. Even when your bank tells you something, go on their website to verify with it. And double check with some other people too. My first stop today, if I was having mortgage problems, would be to a local neighborhood housing provider. I keep a link below in all my videos for you to reach out and speak to somebody for advice and concrete assistance. We always suggest here in Brooklyn neighborhood housing services, but nationwide they have a lot of organizations just like NHS that will help you if you're facing problems with your mortgage. You can go to them, explain the situation, and they can help you, telling you how to reach out to your mortgage. They would even give you a letter to send and actually be an advocate for you if you're having problems. So definitely reach out to them at the same time as you contact your bank or mortgage provider. Now let's talk quickly about short sales, which is another option for you to keep your home. A short sale can give you a fresh start and avoid the whole foreclosure process altogether. The only negative thing about short sales is that they can take a long time to be processed. A short sale is basically when your mortgage company allows you to sell your home for less than what it is actually worth, as long as it covers most of their mortgage. The only problem is that they get a lot of these requests and they take months to let you know whether they're going to approve the short sale or not. So, because it takes so long, a lot of potential home buyers that would have purchased your home at a short sale, they give up and the short sale doesn't go through. So that's the only problem with short sales, is that the bank is not that diligent or fast in following up on them. A short sale may also have tax consequences and or impact your credit score, but you should contact your tax advisor. Just as with every other information and opinions that I'm giving here, contact your tax advisor to see what are the consequences. Remember, I'm not an attorney. I'm just giving you my own opinion and advice from what I have gone through in the past and my own research. The real estate foreclosure process in Brooklyn and New York City takes approximately 15 months from the date of the first missed payment to the sale of your home. But in actuality, it could take a lot longer than that. Here in Brooklyn, I know people who have been in foreclosure for 5 years or more. I kid you not. A lot of people don't want to come to grips with what is happening, and they keep thinking that some miracle is going to happen, so they really don't take any action. But you'd be surprised to know that a lot of these people have equity in their homes. And if I was them, what I would do, which is what we did when we were in foreclosure, is I would sell my property and take advantage of that equity. Who knows, you might be able to sell your property and still come out with more money so that you can make a fresh start, either decide to rent or make a deposit on a new property with terms that you can actually keep up with. The best thing to do is not just sit and think, because they can't put me out of my home for another 4 years, that you're not going to do anything. Believe me, during this time, all the missed payments are accruing, fees are accruing, interest rates are accruing. So by the time you actually think about selling, there might not be any equity there. So be proactive. See if selling your home is an option to get you out of the problem. The long-term stress is definitely not worth it. The same way that you got this home, believe me, you can work to get another one. Let me know what you think are the best options: foreclosure, forbearance, or for sale. What would you do? Please let me know in the comments below. Until the next time.